Hello everybody, welcome to the midweek live stream. I think this is probably going to be the last midweek live stream I do this year. I think next year is too close to Christmas. Next week is too close to Christmas. But we'll do it as normal on Friday. It's a bit of a strange one today, I think, because we're waiting for this US interest rate decision a bit later on today with expectations for, I think, 0.5% rise in the US. So I think we could see something of a quiet day. I've had a good week this week though. I talked about that S&P trade on Friday I was thinking about doing. That was Friday. We had that weird move, or that sharp sell-off on the PMI data, the factory gate inflation data. And I said I was going to buy it if it drifted back in the afternoon. It didn't actually come back to the lows until the close. So I did end up buying on Monday of this week in here somewhere. And of course we had that massive bump higher yesterday on that inflation data, so that was very welcome. It's a very good start to the week. That was, but again, I'd expect a quiet afternoon until we get this latest US decision out of the way. Let's get the risk warning done, then we'll get into it. So this presentation is only for educational purposes. It does not contain and should not be construed as containing investment advice or an investment recommendation, or an offer of or solicitation for a transaction in any financial instrument. David Jones accepts no responsibility for any use that may be made of these comments and for any consequences as a result. You should consider whether you understand how spread bets, CFDs, futures, foreign exchange work, and whether you can afford to take the high risk of losing your money. Trading is risky. So as usual in these, we'll have a quick look at the major announcements for the rest of the week. The live stream, as usual, will happen, the next one, on Friday at 2:30. So we'll have a look at these announcements. Then after that, we'll jump into the markets and take a look at what we should be watching in the days ahead. So today, we've had that UK inflation data out this morning. So UK inflation, slightly better than expected. Was it 10.7% from memory, I think, is where UK inflation is. And the expectation was for 10.9%. I'm just trying to see it on the BBC website, but I think that was the number for UK inflation. Then, of course, tonight we've got the US interest rate. As is often the case, the press conference may actually end up adding more volatility to the market rather than the decision itself. But let's see what happens. But I would absolutely expect a quiet afternoon UK time until we get that US interest rate decision this evening. And I'll be glad when it's out of the way, because it has felt over the last week that markets have been somewhat marking time a bit until we get that decision. And then tomorrow, UK interest rates tomorrow. I think, is there speculation 0.5% in the UK tomorrow for interest rates, and European interest rates as well. So a lot going on over the next 24 hours when it comes to interest rates, and Friday is a bit of a quieter day. So we'll see. So that's it for the rest of the week. Quick plug from the sponsor, which is me as usual. I run a trading course. There are two parts to the course. There's medium-term trading over weeks and months, which is still probably my preferred approach. There are 11 video lessons on that. Shorter term trading over hours and days. There are 7 video lessons on that. I wrote that course in October, November this year. And then as part of the course, you get 4 live webinars that are run every month. It's a bit of like a trading clinic where I talk about any tweaks to the approach, answer any questions you've got, any adaptations, all that sort of stuff. As usual, I'll show the numbers. I show the numbers for a couple of reasons. First of all, I think it's good marketing for me to show the numbers, but also I think to show how important it is, and so few people do this, to treat trading like a business and keep good records. So for me, good records, absolutely critical to figure out where am I going wrong, where am I going right. So when I put together the short-term trading course in October, November, I opened an account and put £4,000 in, because I thought £4,000, okay, lots of accounts open with less than £4,000. Some accounts have more than £4,000. But for me, £4,000 was a reasonable amount to start trading with. And because my approach is to have 2.5% risk per trade, it meant the risk per trade was £100. So it was quite easy for me to size the trades up. As usual, this is the rolling 30-day closed trade P&L up to yesterday. So I closed 2 trades yesterday. So over the last 30 days on this, what started off as a £4,000 account, it's made realised profits of £586, which is a cracking return. You know, I think if I broke that down into a percentage, it's about 14.5% over the last 30 days on this account. You can see I didn't do much trading early December. I really couldn't see the trades. And then towards the end of last week, beginning of this week, I did more trades. I did T-bond trade. We'll take a look at that, and that S&P trade, and closed them. The S&P trade ended up being my biggest winner for about 5 weeks. I think an oil trade I did in early November was the last biggest winner, but that did well. And you can see down here the P&L. So that's the P&L from trading based on the principles I go through on the course. This number, as I often say, when I'm looking at the 30-day snapshot, is somewhat unrealistic, I think. 65% of trades are winners. Again, I think if you're going to come into trading, or you're new to trading, and you're expecting 70 to 80% of your trades to make money, you're probably going to be in for a bit of a disappointment. So for me, if I look at the longer term numbers, so this is the last 90 days trading this same account. I actually started trading it about mid-October with £4,000. You see a bit of a wobble into November, and that's the account since then. So over the last 90 days, it's made just under 1,100 quid, which again, you know, I think is a great return. Of course, I've got to say, past performance is no guarantee of future results, but that's a 27% return on that account over the 90 days. And this number here is much more realistic. What percentage of trades were winners? So for me, longer term, my average is typically oscillates between 57 and 60% of trades end up being winners. So that's the performance over the 90 days. With the trades closed yesterday, the account has pushed out to fresh highs since I started trading it. And again, this sort of stuff is always really important for me. I look at the trend of my P&L or my account balance, as well as looking at markets trend, you know, because obviously not every trade is going to be a winner. So again, it comes down to having a sensible business-like approach to trading. Okay, and that's the results trading based off the short-term course, using the principles in the short-term course. Trades typically held for perhaps 2 to 5 days. I've got one open position at the moment, so I snapshotted that as well about 12 o'clock today. Short the dollar index, so that isn't included in that figure or that figure. So there's another, as of 12 o'clock, another £100 of open profit. I fully expect to get stopped out of that trade for a profit before the interest rate decision today, and that doesn't bother me at all. I'd much rather have, well, I don't know, I'm not bothered about having a trade going into this interest rate decision, because I think markets could well be all over the place for half an hour or an hour, but there's an extra £100 of profit there. So that's it. That's my trading course. You know, I show this stuff. I think I've said it before. I think trading courses are full of absolute con artists, you know, who talk about how it should work, but don't actually do it. You know, for me, you know, I want to show the real P&L while I was trading the course, you know, so again, with the disclaimer, past performance is no guarantee of future performance. People can see what to expect. So I know it's an expensive time of year, blah, blah, blah. So I put a discount in place again to the end of the year, because I know some people watch these videos, they don't watch them live, they might watch them in a week's time. If you want to enroll in the course and use get a 20% discount, use the code YouTube originally enough for a 20% discount. Go to my website, jonesthemarkets.com, to find out more. Any questions, drop me an email, dj@davidjonestrading.com. Okay, so there's the numbers. You've seen the results so far. Go to the website, find out more, and use the discount. And then, as I said, in January, the price is going up by 250 quid. So if you buy it now, you get the discount. Okay, there you go. Let's have a look at the markets. What's going on? Let's start with the S&P. So there's inflation numbers yesterday. It's absolutely nuts, that move yesterday. I was catching up with an old mate yesterday, having lunch down in Bournemouth, and this, you know, and then suddenly the market, the S&P goes from 4,020 to 4140 in about, well, less than 10 minutes. Yeah, so a massive move on that number because inflation was not as bad as expected. But as is often the case, I think the mistake that plenty of people will make is to chase markets like this. As is often the case, as I say over the payrolls, the first move is quite frequently the wrong move. And what happened yesterday? It gave it all back and more. By 5:30, 6 o'clock my time yesterday, the market was trading below where it was when that number came out. So I thought, it's a really interesting move yesterday. It was great for me because I was long and I moved my stop up and came out. But I think a great lesson that don't get sucked in by volatility, I think is the lesson there. Don't get sucked into chasing volatility because it can all get a bit messy. But let's take a look on the dailies. So this is the move. This hasn't changed. We have been looking at this trend for a while now. This is the S&P trend since the beginning of the year. I think I've said 41.55. For me, that's an important line in the sand for the S&P. If it can break that, then perhaps it does start to look as if this trend is reversing. But for me, strength up to 4,100 still looks like a go short into this trend opportunity. Okay, let's see what happens tonight. Hopefully we'll have a better idea when tonight's out the way. I can't really see, even if the market really likes the decision or the press conference tonight, I really can't see, famous last words, the market rallying 150 points, 140 points through this level. But let's see. I think on Friday we'll have a much better idea when the dust has settled. But for me, the trend is still down. We've been stuck. If we flip this over to a shorter term chart, for the past month, we've been stuck. We have been trending higher. Where's a month ago? But it is still broadly sideways. This is the last month on the hourly chart. Loads of support ahead of 3,900, and then quite a bit of resistance around 4,100, and we just chop. Let's see if the chop changes after tonight's decision is out of the way. So that's the S&P. So exciting week so far, hasn't changed the bigger picture though. Nasdaq is going to look pretty similar. I was humming and hawing when I did the S&P trade. The Nasdaq trade I think was just as valid. We had that move. There's Friday's move. The market again sells off into the close on Friday. After bouncing after that PMI data, we had it all a bit sideways on Monday, a bit boring, strength into the close, and then bang, that explosive move yesterday, where it took the Nasdaq from 11,760 to 12,200, so 400-point move on the inflation data, and gave it all back as the day went on. So for me, I'd probably, famous last words, be leaning towards a rally from here, but with this decision tonight, all bets are off for me. Let's see what happens when the decision comes out. The daily chart on the Nasdaq is going to look pretty similar to the S&P. The Nasdaq on that number pre-market yesterday did bump up to its best levels for a couple of months, October, November, December, 3 months, I should say. So back to mid-September levels. Let's see. Again, I think let's have the dust settle for a couple of days and see what happens. DAX, nothing exciting to say on the DAX. For me, as I've been saying for a few weeks now, I think the downtrend on the DAX is over. It's much further along than the S&P or the Nasdaq has been. We've broken some big levels. It looks like a buy the dip. I'd rather have a bigger dip than this though. So nothing too exciting there. FTSE, I've never got the FTSE on my watch list, have I? Because I don't really care about it. But let's have a look at the FTSE. Like we saw on Friday, this has been this 7,600 area, a real barrier for the FTSE going back an awful long time. We've got to go back to, or 7,700, go back 4 years to see the FTSE much above these sort of levels. So again, let's see what happens. For me, if I wanted to go short the FTSE, then strength up towards 7,600 looks like a good short. But as I always say, it's not a market I trade. So not much interest for me in the FTSE. It's all about these US markets, particularly today, particularly with this interest rate decision a bit later on today. And the dollar index, the poor old dollar index. This obviously is going to be a market to watch tonight because it's an interest rate decision from the US. what market will we going to see some volatility, if any? It's going to be the dollar index. So I'm short, I think I showed, didn't I? I'm short the dollar index in my shorter term account. I've got no long positions in my longer term trading account. First time in probably 18 months, I haven't had a longer term position on the dollar index because it's broken down so much from these highs, these September highs. And it's going to be interesting to see what happens down here. We do have this long-term trend for the dollar index about 18 months now. I'd argue that trend is still up. We've had a lot of damage done to that trend though in the last 3 months. What's going to happen around 101, 102 if we do see the market down there? Let's see. But for now at least, this dollar index really struggles. This is the hourly chart. That was the hit it took on the inflation number yesterday. This dollar index really struggles to hang on to any strength over recent months. So absolutely the right medium term side of the market has been to be short. Let's see what tonight brings for the dollar index. So not too much to say on that. Let's look at pound against the dollar. I was thinking actually, and I do wonder now, because I was saying I didn't believe the break in the downtrend. And I think now, this is why I think in trading, it's important to keep an open mind. I think now perhaps I should believe the break in the downtrend. I think you're saying 122.50, 123 for me was the big level. We did see the market, if I was looking at the market then, that for me would have been an interesting short for the pound, 5th of December, so just over a week ago. But bang, we're here. So yesterday, the pound hit its best levels since June. 6-month high on the pound against the dollar yesterday. So again, I do think that finally, this looks a much more sustainable run than any of the counter trend moves we've had in the pound this year. I wouldn't trade it yet. I'd wait for a bigger sell-off from here. I think perhaps the interesting trade in the pound was this morning, and again I wouldn't have done it because it's too short term for me, but when those inflation numbers came out, was it 7:30 this morning, and inflation was a bit better than expected, which normally would be slightly bearish for the currency. We only saw the pound wobble for about 10 minutes and then had a bit of a run up. The market ran up about 60 points. So I think that would have been perhaps one way of trading the news when the market doesn't act the way you thought it was going to act. But again, for me, let's see what happens tonight. This is pound against the dollar. There'll be a lot of volatility because of this interest rate decision. Euro dollar has absolutely been for me the better market to go long of rather than the pound. I think we saw the euro back in November, so about a month ago now, break out the downtrend, break through what was for me an important level around 102. So again, for me on the euro against the dollar, I'd be a buyer of a dip. I've got the short dollar trade on at the moment, which is similar to being long the euro because the euro makes up a big part of that dollar index basket. But again, let's see. So for me, absolutely the recovery continues in the euro. It was only yesterday. Again, I'm guessing that's a 6-month high. Yeah, we saw a 6-month high yesterday for euro against the dollar. Again, I'd rather buy a dip. It'd be nice if we had a dip down maybe to 103 on euro US dollar. But let's see. Let's see what happens a bit later on. What else do we want to look at? Aussie dollar. I think this is interesting. I was going to do a trade on this week, but I already had the dollar index trade on, I had an S&P trade on, and I had the T-bond trade on. So I didn't do it, but it would have worked well. Because again, of course, with the dollar weakness on that inflation number, everything quoted against the dollar went up. So we saw a good move on the Aussie, about 130 point move on that news yesterday, which taking us to the daily chart on Australian dollar, US dollar. Let's take a look at this. I do start to wonder, is perhaps this one turning the corner? For me, the euro still looks more convincing that it's turned the corner. I suppose if you absolutely didn't believe the Aussie's strength, for me, going short now with a stop, the other side of maybe 69.20, looks like maybe an interesting trade. But again, I would not do anything before tonight's decision is out of the way. Let's take a look at some of this other stuff. Let's take a look at gold. So again, gold, as you'd expect, just to flip over to yesterday's move, as you'd expect, big move higher in gold on that inflation thing because the dollar weakened. So the gold price went from 1788 to what, 1824, 1825. And for me, yeah, I think, like I said last week, it absolutely, to me, this downtrend in gold that had been in place since March is over. I'd rather buy a dip. We've not had any big dips since last week. That would be the interesting thing. If we get, and I'm sure we will, if we get a bit of a run of US dollar strength sometime between now and Christmas, and put some pressure on these markets like gold and the euro, for me that's a really interesting trade. If we see these markets, perhaps we see gold push back down towards 1740 or somewhere. Let's see what happens. What goes on with that? Silver, same sort of thing as gold. We are. I've got a few random lines in there. Let's get rid of those. The recovery continues again yesterday on silver, best levels since April. So not quite an 8-month high on silver yesterday, but that trend is continuing. Again for me, I'd rather be a buyer of a dip on silver. So nothing too exciting happening in gold and silver, just continuing those recoveries that we've seen for a while. Let's take a look at the energies. Crude oil. And now crude oil has had a good run for 3 days. It's coming off. When did it make that low? So Friday, we saw the lowest for crude oil since December last year. So we had almost a 12-month low for crude on Friday. But since then, it's had a good run. And I think it still looks, in the short term, if we flip over to the short term, it still looks strong. I've seen that someone said in the chat they've gone short oil, which is fair enough, with the stop at 77.80, which again I think is perfectly fair enough. If I had to go short now, I would, put my stop up here somewhere out of the way. But this is the run we've seen over the last few days ago. So we've broken out again yesterday and had a little tiny breakout today. So for me, in the short term, I would be a buyer of the dip in oil. So perhaps we'll see this thing run a bit higher in the short term. But for me, this big trend that's been in place since June, so we're 6 months into this downtrend, is still in place. So for me, any strength in oil looks like a selling opportunity. But at the moment, for me, it's still a bit strong. I think for me, the interesting trade in oil, and let's see where we are on Friday. If the market, runs back up, perhaps near 80, if it gets that high, and then starts to run out of steam again, I think that could be an interesting trade. And for me, I'd look to have my stop somewhere above that December high so far, about 84. So absolutely strong in the short term, oil. But, we have seen strength in oil before, like back here, September, good run in September, from 76 up to 92. I mean, that's a big old move. That's a 20% move plus in oil into October. But it didn't change the overall trend. So for me, I'd still be looking to sell into strength for oil. Natural gas, I missed the trade on natural gas. Maybe I'll get a second bite at it this week. But natural gas, it is interesting because it sold off last week and it stopped ahead of the lows from October. October lows just below 5. We saw the market rally 50%. Natural gas continues to be a crazy market. And then we came back down to it. I thought it would spend a bit more time faffing around near 5, but it didn't, and it blipped back up. Let's see what happens if it comes under pressure from here. So for me, it's a little bit too much in the middle of the recent range for it to look interesting, but I'd be a buyer of a dip. If it sold off back down to the low 5s again, I think it's interesting to see if this old support holds. And of course, there is still, for me at least, this longer term trend in the price of natural gas going back to June 2020. So not too much in that one for me. We'll look at treasury bonds. I mean, if you don't look at bond markets, and I am absolutely not an expert in bonds, I really, it's not a market I've ever been involved in from a job point of view, but from a trading point of view, it's always an interesting market. I think so. This is US T-bonds. This is the trade I did this week in T-bonds, and the big trends. If we went back, going back to last couple of years, the big trend is sitting up there somewhere. So the big trend is still down. If you looked at the trend since the summer, August, that does look to be over. So the trade I did on T-bonds, it's not a million miles different to the trade I did on the S&P. So this was Friday's move in T-bonds. No, sorry, Monday. That was Friday's move. Big sell-off into the close. It had been recovering, so I just treated that as a dip. Bought late on Monday night, and then Tuesday, bang, the thing blasted up again. So for me, if you're looking for other markets to watch outside the normal ones that you watch, and you're not looking at things like T-bonds or European bonds or gilts, UK gilts, they are interesting markets, I think, to watch. Let's see what the UK gilt has done. The UK gilts have been interesting, because bond markets are a way of seeing confidence or otherwise in a country and the economy and the government. And clearly, with all the craziness we had in the UK in the summer and into the early autumn, gilts were absolutely tanking. But clearly since then we have seen something of a recovery in gilt markets, although a bit weaker over the last few days. So I think the bond markets, if you don't watch them, they're always interesting markets to watch. So that's it. That's it for the stuff that I want to look at. So what to watch this evening? Well, for me, there are two things to watch this evening to figure out what the market thinks of this interest rate decision, and perhaps more importantly, the press conference or the notes afterwards. The S&P 500, what does the stock market think of the decision? Let's see. Expect volatility. I will be watching it, but watching Netflix as well. I won't be trading it and wait for things to settle down. And the dollar index. So whether you watch the dollar index or you look at euro, US dollar, clearly, a US interest rate decision, it feels like it's been long awaited, this one. It hasn't been that long awaited, but that, the impact it has on the currency and the stock market is really going to be key. So expect fireworks, but again, never believe the first move. We'll have a look at some of the stuff you want looking at. Quick plug for the course. To go and find out more, go to the website, jonesthemarkets.com. The link is in the description. Use the code YouTube for a 20% discount, and I'm keeping that valid for the rest of December before I put the price of everything up in January. Any questions, drop me an email, dj@davidjonestrading.com. Right, let's take a look at whatever everyone wants to look at. Philip Morris. Let's have a look at Philip Morris, the old tobacco company, isn't it? Let's have a look on the dailies. We did look at this. I can't remember why I said let's take a look at it again. I think it was just because I would probably go short now. I think we look at this on Friday, or was it a week ago? Whenever it was. I think these tobacco stocks, Philip Morris is that one. Imperial Brands is one I've got in my SIP. British American Tobacco is another one I've got. I think have done well this year. I don't know how Philip Morris has done. Yeah, you'd be up for the year on Philip Morris. They've been this traditional hedge against not a hedge against stock markets, but they some of these how do you label tobacco company, whatever you call them, old-fashioned businesses have done okay this year, whereas clearly the broader market has fallen. But if we looked at Philip Morris over the last 12 months or so, it's pretty sideways. So for me, there isn't a trade there. If I was going to do a trade, the trade I'd be tempted to do now would probably be a short. And going short, so it started to struggle ahead of $105 again. So perhaps go short with a stop at 108 would be the trading idea for me, to see if we give up some of these gains at least that it's made since October. So that for me is the trade off the dailies. If I was looking at the hourlies, because again we've got conflicting trends. If I was trading it off the hourly chart, perhaps weakness to 101 is a short-term buy, looking for a squeeze up to 104, 105. So it's still 6 of one and half a dozen the other for me, but perhaps we'll see this 105 level be something of a barrier for Philip Morris again. So interest rates are out. I always get confused by the times. Tom is saying 7 p.m. UK time. I always get confused what time they're coming out, so I'm going to go with Tom for that. The announce rate's at 2 p.m. US time, so that is, 7 p.m. UK time. That's the short oil. Did you take the oil trade 2 days ago at 70? No, I didn't. I didn't take the oil trade. And I think, again, probably because I had too many trades on. I had about 4 trades on, short-term trades on, and I thought I don't want to start loading up. But there absolutely, for me, with my approach, there absolutely would have been a trade. Where would I have bought it? I probably wouldn't have bought it till about 74.5, to be honest. I probably would have gone short in here and then maybe flipped it there. So it wouldn't have been a brilliant trade if I had taken it, but they can't all be brilliant trades, can they? Can we have a look at wheat? Yes, we can have a look at wheat. I think I've still got my wheat trade on. Yeah, I will have, just about. It's the same old wheat. You know, it's not. It's looking a little bit vulnerable. I bought. You know, I do longer term trades as well as shorter term trades, and for me, a longer term trade might last a few months. Some of the dollar index trades I had, because the trend was so strong, lasted more than a few months. So I've been in this wheat trade since about August, and it did okay initially, and it's come off. And I think again, it's trying. You know, for me, around about 700, whatever that is. I guess it's $7 a bushel. I think is probably what that is a big level for wheat, but it absolutely needs to get a move on. If it's going to recover, it needs to start recovering, and it's not. So for me, I'm still in the trade. If it drops below 700, you know, I think the risk is for a deeper sell-off in this market for me, and I will be out of the trade. If we take a look on the hourlies, that's what it looks like on the hourlies, and you can see it's sort of trying to build a recovery. So I suppose if I had to do a trade on wheat now, the trade I would do, I'd be a buyer on the short term, and actually the longer term basis as well. I'd be a buyer. I'd take the view, all right, we're only a week into it, so let's not get too carried away. We've had a bit of a recovery going on in wheat for a week. $7 has been a bit of a floor. It traded up to 752 today. It's been knocked back today. I would be a buyer. So I'll be a buyer of the dip in wheat. Let's have a look on Friday how that would have worked out. So I'll be a buyer around 725 on wheat. Let's see what happens. So a bit boring, but quite a bit of volatility over the last few days. Can we look at Greggs? Yes. Everyone's favourite purveyor of sausage rolls. Greggs. Let's have a look at those. What's their share price doing? Let's have a look on the dailies. Look at that. I remember they did really well. Was it they did well pre-pandemic, their share price, didn't they? So August 2018, they were 960, and they touched £25 in Jan. Clobbered in the pandemic, obviously, but then of course deliveries and everything else, I presume, ran up. I would be a buyer. I would rather buy a dip though. So I think I would take the view the downtrend in Greggs is over, and we've got this recovery going on that's been going on since £16.15 in September. I'd rather wait to buy a dip. But if I bought it now, the closest I would want my stop is maybe down at £21, something like that. But for me, it has broken out this downtrend. You know, we were getting, up until September, you know, just a steady sell-off, weren't we? Lower highs, lower lows, usual textbook stuff, and then bang, starts breaking out, and we've broken some levels on the upside. So for me, I'd be a buyer of a dip. The risk is, of course, if you're a buyer of a dip, the dip never happens, and you miss out on the move, like I did in natural gas the other week. But yeah, it's an interesting one, Greg. So let's keep coming back to it. Let's see how they're doing. JP Morgan and Tesla, JPM. Let's have a look at those. I saw an ad for JP Morgan on YouTube, I think just this morning. JP Morgan it's another one that looks like perhaps the worst is behind it. So for me, this is another one where I would be a buyer of the dip. So again, a very rough downtrend, might look something like that, or probably better, something like that. For me, either way, that's finished. So what would you do now? So, you know, it was only early December, JP Morgan stock price traded to its best levels since March. So we did an 8-month high in JP Morgan. I'd rather buy a dip. You know, I do have a problem with markets that go almost parabolic like this, yeah, where there isn't, it's up, 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 or down, 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 down. I find them quite hard markets to get into. So for me, I would quite like a dip in JP Morgan, but I would, for me now, definitely be looking to be a buyer of the dip rather than a seller of strength. Tesla. Oh, poor old Tesla. Look at that. So Tesla, is that pre-market or is that yesterday? Yesterday. So yesterday, Tesla stock price hit its lowest levels since November 2020. So 2-year low for the Tesla stock. This had been a big level, sort of 180 in the past. We're through that. I mean, that trend is down, isn't it? I think, I don't follow it that closely, but I think clearly maybe what's going on with Mr. Musk and his acquisition of Twitter perhaps isn't playing out too well with Tesla shareholders. I also think, didn't they wind back production in Shanghai by 30% or something? So yeah, Tesla, to me that looks like a sell on strength. Tesla, that's it's quite a big level it's pushed through yesterday. So doesn't look good. Doesn't look good for Tesla. We looked at Tesla, AMC Entertainment. I will do it, but I'm not a fan of these meme stocks as well. Yeah. I mean, it's just one of the famous Wall Street bet stocks, of course, from Reddit, along with what's the other one? GameStop, isn't it? GameStop. I suppose if you. And I think all of the short squeeze nonsense has been and gone in these stocks. Yeah, I know that people still like trading them. I bet there's a lot of people underwater. But AMC, okay, if you absolutely had to buy them, there are definitely worse places to buy them, like up here when they were $42. I suppose if you absolutely had to buy them, for me, it'd be a buyer at $5.70 with a stop the other side of $5. But we did a video on this a few months ago, actually, looking at the so-called meme stocks, and basically, if you weren't in on day one, pretty much when the story broke, you missed out on so much, and you would have lost money overall, and that includes the likes of, I think BlackBerry was one at the time, wasn't it? Going back, is it a couple of years now? But yeah, I'm not a fan of these crazy meme stocks at all. But we have seen over the last 7 months, sort of $5 to $6 be a bit of a floor. It doesn't look that exciting to me. It's one I would absolutely never ever trade. But let's see if it can hold above $5. Sterling yen. Sterling yen. I've done a couple of trades on sterling yen recently, and I've been wrong-footed. I was short sterling yen the other week, and I got stopped out on Friday in sterling yen. So for me, I suppose you could say, hang on a second, you could absolutely argue the trend for the pound against the yen is still up, although it is all over the place, with that big spiky move here. The trend, and let's get rid of that line because it's messing things up. The trend over the last, 2 months is still sort of up, but it's all got a bit messy. So I really don't know. So I was short in here somewhere. So I was short in here from about a week ago with a stop above 167.50. This is on the hourly chart now. The thing had spiked out. I got stopped out. It did run a bit higher and it's come back down again. So I think it's a tricky one to call. For me, the approach that I use, and I can see who you are, and I know you've seen it on the course. There is not a trade there in sterling yen at the moment. Probably the trade would be if the thing tomorrow rallied up to 167.60 to be a seller. So for me, there isn't a trade there. I suppose if we want to sit on our hands, then perhaps the trade is if it sells off back to the bottom of that range that it was in at the beginning of December with 166 as the floor. So for me, there's nothing there in sterling yen. It has been a bit messy over the last few days, but let's see what happens. But it's I think there have been, I would never say easy markets to trade, but definitely easier markets than sterling yen, as I have found out to my cost, getting stopped out on that sterling yen short. So I think that is a tricky market sterling yen. Any views on DocuSign? DocuSign, that's the thing that you get an email and you sign the document, unsurprisingly, isn't it? DocuSign's it's gappy, isn't it? I mean, that's had a big run, hasn't it? So that's gone from $41 to 58. It's a 40% move in about a week, DocuSign. So this is another one of these ones that I absolutely would not be in that. But if you look at the bigger picture tells a slightly different story, doesn't it? It's interesting, isn't it? I mean, that's gone from $300 just over a year ago to 58. So for me, I would be waiting. Would you go? There are arguments here for being short or long, and I hate sitting on the fence. Okay, so what I would say, I'd be looking to go short, right? So I would be looking. The first day it had a bit of weakness, I would go short. So let's see what happens today. So let's say if you had a little candle like this, let's have a look here on Friday. If you had a little candle like this today, I'd go short, and I'd put a stop loss the other side of $60 because I would take the view the market's overreacted. So for me, when you get an extreme move, I think in the early days, in the early years, I'd be tempted to go with that move and just buy in like a headless chicken. But given I'm a much more mature person now, I always assume that the crazy move is the wrong move. So for me, I'd be looking to sell short this one. But you absolutely could make the case, well, hang on a second, it hit support in November at $40, came back to it in December, and we're off to the races, and the downtrend is over. You absolutely could make that case. For me personally, I would sell following a day of weakness, given the longer term performance of the stock. But it is a really interesting one. So let's come back to it on. Can I add that to my list? Let's come back to it on Friday. I'll add it to the list and see if I remember to come back to it. But that is interesting. And the EU 50 you mentioned, didn't you? The EU 50, is that the Stocks 50, isn't it? Never look at that, but let's have a look at it. EU Stocks 50. I'm guessing it looks a bit like the DAX, doesn't it? It looks a bit like the DAX, doesn't it, really? So, I would say, for me, the downtrend, like in the DAX, the downtrend is over in the EU 50. I'd rather see a better sell-off, a deeper sell-off, to really test how committed people are to buying the dip. But for me, I'd be a buyer. Or I suppose on a short term. So the flip side is, on a short term point of view, we had that stupid move yesterday. You could go short. I mean, for me, I'd rather sit on my hands and buy the dip. But it's a similar looking market to the DAX. That one. And we looked at. Have I jumped ahead? We did look at Greg's. Adidas. I think it's been all over the place, isn't it? Because they had a change of chief exec, didn't they? Because I got completely wrong-footed when we looked. Oh, that's the wrong stock, isn't it? That looks like the sky at night. That looks like Adidas. Is that the one? I would sell it. Yeah, because I remember we looked at it on a live stream, and it would have been here. It was a Friday. There you go, 4th of November live stream. And we had this big move up in them. And I said, I sell short. Market's overreacted. It was a new chief exec coming in. The market carried on higher, quite a bit higher, and then it ran out of steam. I would sell short. That's what I would do, because the big trend is down. So if I was going to go short today, I would still want my stop probably above 137, whatever that level is, up there somewhere. Yeah, that's what I would do for the stop. So for me, the trend is down. We've had a bit of excitement with this new chief exec, but doesn't change the bigger picture so far. Smith and Nephew. Let's have a look. Smith and Nephew. Is it pharmaceutical? Smith and Nephew. Smith and Nephew. Manufacturing. Advanced wound care and surgical devices. That is a sexy description, isn't it? For what your business does. Oh, hang on. That is Smith and Nephew. All right, we're going a bit off tangent. Let's have a look at the stock. That is a downtrend, isn't it? I would say so. I think it's tempting to perhaps get sucked in to the little run. Could be tempting. For the little run we're having at the moment, I would go short. For me, so it's interesting actually. Today is interesting on Smith and Nephew. So we're running in to this £11 area, or we have run into this £11 area. That has been a problem So for me, I would be tempted to go short with a stop somewhere above 1160. Like I said, I don't trade individual stocks. I buy them for my ISA and all that stuff, but I don't trade stocks. But if I did, for me, that looks like a good short, applying the usual rules that I apply to everything else. Suncor Energy. Let's have a look at Suncor Energy. Suncor Energy. Why is that not coming up? Don't know. It's not coming up. It doesn't exist. Let's put Sun in. So a Suncor, is it Core Corp? Suncorp? I don't know. I'm a bit confused on that one. DAX. We looked at the DAX. If you look at the rewind, we looked at the DAX. So for me, I'm a buyer of a dip of the DAX. I think the downtrend is over for the DAX. AMC. Impulsive trade on NASDAQ. Buy or sell ahead of the FOMC. Well, as long as you recognise that you are gambling, right? What I would do is, it is a gamble because who knows? The market, the NASDAQ could be up 200 points in the first 10 minutes, then down 200 points in the next 20 minutes, couldn't it? It can be all over the place. I would be a buyer. Let's see what happens. Yeah, I think, well, who knows? It is ridiculous. That's why I never trade like this. I think stock markets might like it. Perhaps they've built up too much nerves ahead of it. Let's see. Let's see what. So that's my flip a coin trade. I'd be a buyer of the NASDAQ. Here we go. Let's timestamp it. 11,800. See if we remember that for Friday. Buyer of the NASDAQ at 11,800. Absolute coin flip gamble ahead of today's interest rates decision. AMC, NASDAQ. Yeah, just toss a coin. See, Nick. Yeah, here we go. We're on the same wavelength. Mackles. What is Mackles? Mackles, is that? Don't know. I don't know if you were typing something else. Any particular reason why you don't trade stocks? I used to, but I think for me, it's just too much to watch. And also, and this is a biased opinion from me, I think, a lot of the stocks, if you're trading the big stuff like Tesla, Microsoft, Facebook, Meta, whatever they're called, clearly what the underlying market is doing, will dictate, a significant percentage of the direction they travel in. So if you're trading Microsoft and Tesla and Netflix and blah, 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 and the NASDAQ's going up anyway, then they'll be going up. So for me, it seemed like a lot of effort compared to trading the index, or it didn't really add that much on top of trading the indices, which is definitely a subjective view for me on trading stocks. But you can see all the different markets I watch. There's always something going on. There've been 2 trades this week, actually 3 trades this week. I've had a trade taken the Aussie trade, and it's only Wednesday. So for me, I only typically do a trade a day, so I don't want to complicate it by looking at loads of stocks. I'm just lazy. I'm saying I'm lazy is what I'm saying. Okay, that's it. And I think that's it. I think we're done. So what we'll do the live stream on Friday. I'm absolutely doing nothing ahead of this interest rate decision, and I won't do anything probably in the 2 hours the market is open after it. I think it's going to be really interesting tomorrow to see where things settle down. It'd be good to get this thing out of the way tonight. So I'll be back on Friday, 2:30 on Friday afternoon. If you're not on the course, go on my course. It's the best trading course out there. Treat yourself for Christmas, 20% off before the price goes up on the 1st of Jan. And you know me, I will put the price up. When I say I'm putting the prices up, I do put the price up. So you go to the website, jonesthemarkets.com. But if you do have any questions, you think, is it for you? Feel free to drop me an email. I'm very open, as you can see from all the P&L figures I show. Drop me an email, dj@davidjonestrading.com. So we'll wrap things up there. Exciting evening ahead for market geeks. And we'll come back on Friday and see where we are. Good luck with your trading, and see you in a couple of days if you're around.